Inflation, bank crisis, you take your pick. What if it was possible that in an attempt to stop the bank crisis from continuing, the Federal Reserve ignited inflation to levels that we have not seen since the 1970s and perhaps even worse? That is the real fear for today. I'll break that down for you. I'm going to show you the data that you need to know. And you got to realize what's happening right now with this bank crisis, it is only the tip of the iceberg. You cannot just simply print money and create all these bailouts to resolve any of these issues. I will give you that information here today as well. You came here for the truth, so let me unveil that for you. Right here, Fed set to raise interest rates to 16-year high and debate a pause. Officials could keep their options open in crafting signals around the endgame for increases. The Federal Reserve, highly anticipated meeting coming up. Of course, stay tuned to the channel. Hit that subscribe so I can bring you the data you need to know. But in the meantime, the expectation is that they're going to increase by 0.25%, bringing this to a level we haven't seen in a very long time. And that would be something that further constricts and further tightens the financial system, lending and borrowing. Federal Reserve officials are on track to increase interest rates, the fastest rate raising cycle in 40 years. The Cleveland Fed president said, "We are much closer to the end of the tightening journey than the beginning." So she said, let's not call the end of this, but that's where we're at, okay? They're getting there and they want to signal that, and they have this thing called forward guidance, which basically means what they're signaling out there. And you could see that black line. That is 2022, the beginning of when they started to increase interest rates, and it is faster than all of the previous cycles. I would like to note, and what I want to mention here is the fact that when you look at this, yes, it is faster, but we're coming from zero. So anything looks fast when coming from zero. If it was already at a reasonable level, even let's say 2.5, even 5, the pace at which they would need to increase wouldn't have been so significant and they would have been done by now. But of course, this is what they do. So we know that this will come in the future. They will drop rates down to zero, and perhaps next time they'll have to go into the negative to have that same stimulative effect. Let me show you something here. You could see that Blackstone Real Estate Trust limits withdrawals for the 6th straight month. So the impact of this is very clear in real estate. But as long as you stop investors from pulling out their money, they can't, and then everything's okay, right? I mean, come on. Yeah, everything's going to be okay. As long as you just wait this out, pretend that nothing's going on, refuse to give investors money back, well, then eventually everything's going to be okay. I think you got a problem, really, when this happens. They limit redemptions, and by the way, Blackstone's not the only one to do this. A lot of companies do this when they're hurting. I've seen this before with my own very eyes, watching as they restrict that. And every time I witnessed the reopening of that particular fund, well, what happened? The floodgates were open and investors, hurry, hurry, hurry. There's a certain date and time that they need to get all their money out and put all the orders in, and then they close it right there. So it's open just for a day. They can get their money out. That order has to be in before 4 o'clock. Hurry up while the market is open. They get that. And if they missed it for any reason, or if there was a problem because they, some delay, something, then they couldn't get their money back for another few months, and they would be fuming. And all of those advisors and everybody else that were connected in with that, they did not get a few nice words. Let's just put it that way. So what's happening? Why is this going on? I just don't get it. What do you mean? Why are they increasing interest rates? Why don't they just stop right here? Well, of course, we have a huge problem, and that is you made the companies addicted to super low interest rates, and then told them that inflation was going to be transitory. So of course they're not going to, it's just going to be inflation for a few months. That's what everybody's saying. So, okay, no worries. And then it turned out to be long lasting. Another 0.25 percentage point increase would lift the benchmark federal funds rate to a 16-year high. Okay, you're looking at now 5%. 5% at this point here for the bottom is significant. It is at this point, because you know that even though that's technically not enough to squash down inflation, it's a lot higher than where basically everybody thought it would be. Now, I said they were going to increase. I didn't realize they were going to increase to 5% without problems. That's what I said. Oh, they can go higher, but not without problems. So, yeah, I was right, but I mean, didn't take a crystal ball or a genius to figure that out, trust me. Okay? So the sale of First Republic to JP Morgan by the FDIC announced on Monday is the latest reminder of how banking stress is clouding the economic outlook. They're worried about this. You got Swiss Bank, you got all these Credit Suisse and all these different companies that are basically during this credit cycle tightening are finding it to be a very big problem. No, that's so obvious. Second paragraph, the Fed fights inflation by slowing the economy through higher rates, which causes tighter financial conditions such as higher borrowing costs, lower stock prices, and a stronger dollar, which curb demand. That's good, right? We want that stuff. And we can basically, during these times, we can kind of, okay, it's going to be tough. Let's just tighten our belts a bit. Let's just wait. We brace ourselves. It's like a hurricane coming in. You can see it coming down. You know, okay, we've got 3 days to prepare. Let's board up all the windows. Let's make sure all the stuff that's flying around, we're going to make sure that we get rid of all that. And we know it's going to come. It hits, we take it, and then we repair the damage afterwards. But what if we didn't do that? What if we actually just let all the windows open? Let's just make everything, it's all A-okay. And in fact, let's just pour some gasoline in there and light a match. Why don't we? So that we can have a fire tornado or throw some sharks in there and make it a sharknado. Anyway, the point is that's what they're doing. They're only making it worse. All right. So that's the key, I think, for a lot of people. They're just not realizing that there's the two things happening simultaneously. You got the bank crisis, you got the inflation, and they're going to let inflation go. Let me just give you the conclusion here. They're going to let inflation run real hot, and you're going to be destroyed. So what do we do about that? I just don't want to say that and leave you as a cliffhanger. What do we do about that? We have to mitigate the effects of inflation as much as possible, as best we can. Okay, and that means holding on to real assets. That means following the pillars of prosperity. If you want to know about that, just type in pillars of prosperity, the money GPS. You'll get that information as well. At the end of this video, remember, I'm going to show you what's going on and why this is not over. The bank crisis is not over. Here's what the Treasury and the Fed might do in a debt ceiling crisis. So at the same time, on top of all this, debt ceiling is an issue. They're bringing it up. Janet Yellen, my baby, said that as of June 1st, they're not going to be able to pay their bills anymore. What they will do likely is that they will just push this out temporarily, and they're going to come to some sort of standstill at the point, okay, we'll extend it by 30 days, we'll extend it by 30 days. They can start to cut, as we saw, a few years ago anyway, where they started to cut from different, government departments and everything, but ultimately everything still operated, just minimal effect. And that's because it's just temporary. They know that. And so what they do, and the reason they do this, is so that they can push things to the very edge, the very last minute. They create a bill that's like 4,000 pages, and they get things through, and everybody's A-okay with it. Realize that they scoff and they battle it out like the World Wrestling Federation, and then they pretend that they hate each other, and then at the last minute, what do? They sign the 4,000 page bill without reading it. So here we go. Here's the economy. I'll show you some stats. You're looking at manufacturing PMIs actually going up at this point. So all of that has started to increase. So perhaps it's a good sign. We don't know if it officially goes into recession, companies start hurting bad, but the data is showing progress. And I want to make that clear. Here we can see it again. PMI signals expansion for the first time in 6 months, but improvement sparks higher price pressures. So the price indexes have also increased, which showing us more inflation. Perhaps not a good sign if everybody is hoping that inflation goes down, right? Corporate America focuses on cost cuts and layoffs, not growth. So when you look at what the earnings are talking about, the earnings calls, conference calls, what the CEOs are saying, all the surveys that have been done, basically they're worried about what's going to happen with recession. They're still looking at inflation, and they're saying, basically, how do we cut people? What do we do to reduce costs? That's what all these companies are saying. That's what's going on. It's in tech industry, it's in finance, it's basically everywhere. Okay, just to let you know, you don't have to sit on 100 hours of conference calls and let the money GPS do the digging for you. Okay, GM lays off hundreds from product development in latest cost cutting move. Indeed's price changes leave small businesses feeling burned. So they changed a little something. And I just want to show you this. Understand that, by the way, when you see this, I'm showing you not because of that particular company, but what is important about this is that this is creeping up everywhere. Services are increasing in price, and never forget to include that in your inflation metrics. So now I just want to cover really quickly some other factors that you should be interested in. At the end, I'll show you why the banking crisis is not over. Here we have it. You could see for yourself. North American pilots took fresh steps on Monday to press for a workforce gains. American Airlines pilots back in a strike mandate. Air Canada pilots supporting a merger with a larger union. They're doing this all at the same time. So of course, what do they want? They want more money. They want more stuff. This is happening with other, industries as well. Okay, strikes, unions, all these things are happening. It's not just Starbucks, but it's going on everywhere. 1/3 of US nurses plan to quit their profession. I can't believe, people who are nurses, you are, for the most part, there's always obviously good and bad, but it's a tough job, and quite frankly doesn't pay enough for the ones that work real hard. A survey finds about half of American workers are suffering from financial stress. This is not surprising, but of course you can see that and look at it. People do not have enough money. They don't have enough savings. The emergency savings aren't there either. In California, desperate college students compete for spots in trailer park. 44% of undergraduates are considered obscenely rent burdened. So all of these things adding up to the fact that inflation is running way too hot. It's going on in services, it's going on in the products that you got to buy each and every day, your energy and food and so on. And of course, on top of that, you've got a banking crisis that they cannot solve. So what's going to happen? What is the result of this? They're going to bail out their friends. They're going to make sure that they print more money. And at the same time, they're going to let inflation run hot. Never forget that. In this video, I talk all about this. I break it all down. And hopefully you will join me for that. It's right here up on the screen. You definitely want to check it out. The banking crisis is not over. I'll see you there.